The world runs on oil, but oil doesn't run the world. The dollar does. And for the last 50 years, these two have been locked in a quiet alliance that almost no one voted for, but everyone depends on. Here's the uncomfortable part. If that alliance cracks, the entire global financial system doesn't just slow down, it starts to behave very differently. Let's rewind to the 1970s. The United States had a problem. The dollar used to be backed by gold, but in 1971, that system collapsed. Suddenly, the dollar was just paper. No gold, no hard backing, just trust. Now here's the question no one could ignore. Why would the world keep using it? The answer didn't come from a bank. It came from oil. In 1974, the US made a deal with Saudi Arabia. Simple on the surface, extremely powerful underneath. Saudi Arabia would sell oil only in US dollars. In return, the US would provide military protection and stability. Then something interesting happened. Other oil-producing countries followed. And just like that, if any country wanted to buy oil, which every country does, they first needed dollars. Not euros, not yen, not gold. Think about what that means. If you're Germany, Japan, India, before you can fuel your economy, run factories, or move goods, you need to go out and get US dollars first. So countries started stockpiling dollars, trading in dollars, saving in dollars, even if they had no direct connection to the US. Oil demand created dollar demand. This system got a name later, the Petrodollar system, but the real mechanism is simpler than it sounds. The world needs oil, oil needs dollars, so the world needs dollars. And here's where it gets interesting. Once everyone needs your currency, you gain a kind of power that isn't obvious at first. The US can run large deficits, print money during crises, borrow at lower costs than almost anyone else, because the world is constantly recycling dollars back into the system. Countries earn dollars by selling goods, then use those same dollars to buy oil or invest in US assets like treasury bonds. It's a loop, a very efficient one, and for decades it worked almost too well. But systems that run smoothly for too long start to look permanent, and nothing in geopolitics is permanent. Now fast forward to today. Something subtle is changing. Countries are starting to ask a dangerous question. What if we don't use the dollar? China is buying oil in yuan. Russia is trading energy outside the dollar system. Some Middle Eastern countries are openly discussing alternative currencies. Even small shifts matter here, because this system doesn't break all at once. It weakens slowly, like removing bricks from a wall no one thought could fall. For years, the strength of the dollar came from global dependence, but that same dependence is now seen as a risk. Sanctions, trade restrictions, financial control, they've shown countries what happens when the system turns against you. So they're hedging, not abandoning the dollar tomorrow, but preparing for a world where they might not need it as much. Now, let's be clear, the dollar isn't collapsing tomorrow. There's no clean replacement, no single currency strong enough to take its place, and the US financial system is still deep, liquid, and trusted. But that's not the real question anymore. The real question is this: what happens when demand becomes optional? Because if fewer countries need dollars to buy oil, then fewer countries need to hold dollars at all. And if that demand drops, it changes everything. Borrowing costs, currency strength, global influence, even how crises spread across the world. And here's the part most people miss. This isn't just about oil, or even about currency. It's about who sets the rules. For decades, one system quietly dictated how money flows across the planet, not through force, but through necessity. Now, for the first time in a long time, that necessity is being questioned. So, the next time you hear about oil prices, or currency shifts, or countries making strange new trade deals, look a little closer, because beneath it all is a simple, fragile agreement that oil speaks in dollars. And one day, if it doesn't, what replaces it?